Hey, it's Tank K with Fairway Independent Mortgage and HECM Toolbox. I want to talk to you briefly about the home equity conversion mortgage opportunity as a loan originator and someone out there. If you're a loan originator and you're thinking of possibly adding into your toolbox, right? The home equity conversion mortgage, this is a video you're going to want to watch. If you're someone who's already originating reverse mortgages, this will be helpful for you as well to sort of either remind you or to add additional information that you weren't aware of the opportunity with the home equity conversion mortgage. So first of all, what's the market opportunity? The market opportunity currently, there is over $11 trillion that retirees currently hold in home equity in our country. That's $11 trillion. That is a huge amount of money, more money than to cover 11 Costco's. So one Costco wholesale with two pallets stacked high of $100 bills covering the whole Costco warehouse is $1 trillion, believe it or not. So next time you're in Costco, visualize when you walk in there, if this was completely empty and you had two pallets high stacked of $100 bills, and that was about a little over 7 feet high, covering the whole entire Costco warehouse, that would be $1 trillion. Now, let's add 11 more to that. So we've got 11 trillion plus in home equity that retirees hold. A lot of money, more than BlackRock. Currently, at the time of this recording, BlackRock, the largest investment management firm in the world, has about $8 trillion under management. So if you get into this business, if you're already in this business, know that you're responsible for the opportunity to help those retirees and those people identify and take that idle equity that is sitting there not earning any rate of return and put it to work. Allow them to access that money either through refinancing with a home equity conversion mortgage or selling that home, capturing that equity and using part of it or all of it, depending on how much they have, to purchase another home without paying all cash and not having a mortgage payment. So what an opportunity for the amazing amount of equity that is out there that we can access. So that's the market opportunity. What about the income that you can earn? Well, on a home equity conversion mortgage, depending on how your pay is structured, whether you're a broker or working for a retail lender, or you have a split of 50% with a branch manager or 80% or 20%, whatever that looks like, just know that a traditional mortgage, a conventional mortgage, your income on that type of loan is going to be about 5 times to 8 times less than you would make on a home equity conversion mortgage. So consider a home equity conversion mortgage somewhere between 5 to 8 times what you would make on a traditional mortgage. So if you make $5,000 and it's 5 times, well, that's $25,000 that you could make potentially, right? So $5,000 on a traditional mortgage and commissions, if you were to make 5 times that amount, 5 times 5 is $25,000. Now that's a really high commission, but it's certainly doable, just to give you an idea. All right, so the opportunity for making income, if you were to do just 1 to 3 home equity conversions mortgages a month, that is many more than what you would have to do, well, with the conventional mortgages. You'd have to do a lot more with conventional mortgages than you would, obviously, with a home equity conversion mortgage. All right, so the opportunity is there. Take advantage of it if you want to. Now, that being said, what's next? 39% of current home buyers. This is a recent National Association of Realtors article, which I will link to. But that article shared that 39% of home buyers currently are baby boomers. Okay, baby boomers, those people that are over 62. Actually, currently the tail end of the baby boomers are 56 right now. 58. Sorry. Anyway, I'm right on the edge. I'm not a baby boomer, but I'm real close. So I'm the last of the X. All right. So whatever that's worth. There's a lot of them out there. And the 39% make up the home buyer market currently. So they're beating out millennials, they're beating out Gen X's, they're beating out everybody. They have the money to put down. They have the equity to sell their home and use to purchase another home. They're actually buying second homes. But you know what? Many of them don't know what they don't know. And in the home equity conversion mortgage, we can share with them how this will work, how they can sell their home, buy another one. They may be able to actually boost their budget using a home equity conversion mortgage, where they can, instead of having a budget of say $500,000 with a conventional mortgage or $500,000 purchase price paying all cash, they might be able to boost that to $700,000 or $800,000 depending on their age. So they can actually afford to buy more of a home and buy a home that they really want to retire in. So let's face it, when you're in retirement, you want to live in a home that you want to live in a home in. You don't want to settle for a tiny kitchen. You don't want to settle for a home that is, less than desirable or in a less desirable area. So the home equity conversion mortgage can help those buyers. 39% of all buyers currently make up the buyer's market are baby boomers. So huge opportunity to take advantage of. So what's the current state, of course, and the future state? The future state is most baby boomers and people that are turning 62 will continue to go in and continue on for many, many years. So, you've got a good 10, 15, 20 plus year run. If this is a business you want to get into, this has a long cycle on it, 20 plus years. People that are turning 62, which is, of course, the minimum age to qualify for a home equity conversion mortgage, the FHA product. Of course, there's proprietary products that, can qualify people down to age 40 or down to age 55 and maybe even younger in some places. So the opportunity is huge to be able to do that. Now, where do we get this business from? Well, that's something that's going to come up in a later video. How do we source this type of business? Who do we partner with in terms of referral partners? Do we go direct to the consumer? Do we do social media? Do we, do direct mail? Do we talk with real estate agents or CPAs, financial advisors, bankers, credit unions? All that kind of thing we're going to cover in future videos. But what an opportunity if you're considering doing reverse mortgages or otherwise known as home equity conversion mortgages. Now is a great time, right? With the traditional mortgage market down, rates being up, the reverse mortgage is a great opportunity. If you're already doing them, double down. Start really focusing most of your, not all your business on this particular product and this tool. So one last thing. Who and how do people qualify? Well, I mentioned you need to be at least 62 years of age. Your borrowers do. And so only one person has to be 62, unless you're in the state of Texas, then both have to be 62. Now, in terms of qualifying, since there's no mortgage payment, there is not any kind of a requirement to qualify based on housing or debt to income ratios. We're just looking at the ability to continue to pay property taxes, homeowners insurance, and HOA dues through a residual income calculation. Now, in this video, I'm not going to get into details of how you qualify or how you qualify your borrowers, but just know that most people who are getting these loans are typically on some sort of Social Security, fixed income, retirement income, and usually that income is lower than they were making in their earning years, right? And they're qualifying to buy homes in the $700,000-800,000+ range. They're qualifying to get mortgages of $300,000-400,000 because there's no mortgage payment required. They only have to cover the residual after all of their expenses have been paid that are on fixed payments like installment loans, car loans, credit card loans, that type of thing. After they've paid all that, the residual income that's left over is the amount that they qualify for, that they've got to cover their property taxes and homeowners insurance. So it's a residual income qualifier, similar to like a VA loan where they're covering maintenance and that sort of thing. So the qualifications can be much easier. In terms of credit, also there's no credit scores required. I mean, really? No credit score required? So yes, there's no credit score required. However, they are going to look at payment history, especially on property taxes, homeowners insurance, and HOA dues, making sure they paid those on time. If they were late on that stuff, they're going to ask questions like, well, why were you late? Well, if you were late because of what they call extenuating circumstances, those extenuating circumstances can be things like death of a spouse, right? Or cancer, some other kind of debilitating disease or sickness that kept them from focusing on paying their bills, right? Maybe a spouse is ill. Those are kinds of things that can be overlooked as long as there is evidence to back that up with doctors, letters, medical bills, that kind of thing. So hope that helps. This has been a lot in this particular video, but we went through the market opportunity. We went through what kind of income can be earned on these loans. We talked about the percentage of buyers that are making up the market right now, being 39% of baby boomers. We talked about the current state and the future opportunity, many years to come with this particular program. And we talked about who qualifies. So hopefully this video has been helpful. If you do, like it, subscribe, share it, and spread the word. If you would like to connect with me, please send me a DM or in the comments, and happy to connect. All right. Thanks so much, and I'll see you on the next video.